Understanding DSCR loans, debt service coverage ratio loans for rental properties. Hello there. Let's dive into the world of DSCR loans for rental properties. If you're interested in real estate investing or looking to finance a rental property, this is an important concept to understand. So let's get started. Before we delve into DSCR loans, let's cover the basics. DSCR stands for Debt Service Coverage Ratio, which is a financial metric used by lenders to evaluate a borrower's ability to repay a loan. The debt service coverage ratio measures the relationship between a property's net operating income, NOI, and its annual debt service. In simple terms, it tells us how well the property's cash flow covers the loan payments. A higher DSCR ratio indicates a stronger cash flow and reduces the risk for lenders. Generally, lenders prefer a DSCR ratio of 1 or higher to ensure sufficient coverage. Now that we understand the purpose of DSCR, let's explore how it's calculated. To calculate the DSCR ratio, we need two key components: the property's net operating income, NOI, and the annual debt service. The net operating income represents the income generated by the rental property after subtracting all operating expenses, such as property taxes, insurance, maintenance costs, and property management fees. The annual debt service includes the principal and interest payments on the loan you're seeking to finance the rental property. By dividing the NOI by the annual debt service, we arrive at the DSCR ratio. This ratio provides lenders with an understanding of the property's cash flow relative to the loan obligations. Let's consider an example. Suppose your rental property generates an NOI of $50,000 per year and the annual debt service, including loan principal and interest, amounts to $40,000. By dividing the NOI, $50,000, by the annual debt service, $40,000, we find that the DSCR ratio is 1.25. A DSCR ratio of 1.25 means that your property's cash flow is 25% higher than the required loan payments. Lenders find this favorable, as it demonstrates a healthy financial position and reduces the risk of default. Now that we understand how DSCR is calculated, let's explore the requirements and application process for DSCR loans. When applying for a DSCR loan, there are several requirements you should be aware of. 1. 620 or higher credit score. 2. 20 to 25% down payment. 3. Appraisal and 1007 rent schedule. 4. DSCR ratio of 1 or higher. Now, let's walk through the application process for a DSCR loan. Step 1. Find the DSCR lender. Research and connect with lenders who specialize in DSCR loans for rental properties. Homely Broad can help borrowers connect with the right DSCR loan lenders for their specific needs. Step 2. Submit your loan application to the chosen lender. Be prepared to provide information about the rental property, your financial situation, and the purpose of the loan. Step 3. Submit proof of income from your property. Gather documentation that proves the property's income, such as rent receipts, bank statements, and tax returns. This helps verify the property's cash flow. Submitting property's income documents is not possible when buying a new property, and lenders order appraisal and schedule to evaluate the property's income potential. Step 4. DSCR calculation and 1007 rent schedule. The lender will calculate the DSCR ratio based on the provided income and expenses. They may also require a 1007 rent schedule, which provides details about the property's rental income. Step 5. Closing. If your application is approved and the lender is satisfied with the DSCR ratio and other requirements, you will proceed to the closing process. This involves finalizing the loan terms, signing the necessary documents, and completing the loan transaction. Following these steps will help you navigate the process of obtaining a DSCR loan for your rental property. Remember to work with experienced lenders and provide accurate information to increase your chances of success. That concludes our video on DSCR loans for rental properties. I hope you found it informative and helpful in your real estate investment journey. Thank you for watching.